recording. We're good to go. For all you guys that, this is your first time, I sent out a email today or for you guys to go ahead and post your questions here. So basically the way that we do it is I'm going to go through all the questions that you guys sent in, and we'll go through each one, and we talk in here. We talk in this chat room here. Don't use the whole GoToMeeting, raise your hand type thing and in the comment section. We don't use the features of GoToWebinar, GoToMeeting. We just use the chat room. That way everybody can see exactly what you're asking, and it's not just me. Because when you raise your hand and when you send in a question on GoToWebinar, yeah, it comes to me if I look at it, but nobody else will know. So I'll be answering a question and nobody's going to know what the question is. So with that said, we go over the questions one by one and ask questions related to whatever I'm answering. So if this person's asking about bear and bull market and whatever, don't tell me or don't ask me, what do you think of Apple? Do you think it's going to break 100? So stay on topic, ask, whatever questions you want about that question, and then after we get through everybody's, we're going to go ahead and open it up. And my plan is just to go through those. We can talk about scan tomorrow. Scan really doesn't have anything crazy on it. I think a lot of the action, a lot of the plan has been happening between 9:15 and 9:30 in the morning. So for those of you guys that have been jumping in the room before market 9:15, we kind of get an idea and get a plan going, and it's been working fairly well. Usually two or three things from scan, and then add two more from whatever was happening in the morning, and it's been awesome. Now we'll get to the questions, and like I said, we'll go through one by one. If you have questions on that question, ask it in the chat. We'll keep going until we're done. And then we'll open it up, talk about scan, whatever you want to do, and go from there. So what is trading like in a bear market versus bull market? Does the difficulty level increase substantially? Lastly, is it better to be short biased in a bear market versus long? So, this question is a little complex as far as worrying about things you don't really have to worry about. We've been in bull market for a long time. Yes, I usually like to short more than I like to long, but it's really about not being too biased. And what I mean by that is never think that something has to bounce, and never think that something has to pull back. If you can start in based on a certain number, based on a parabolic move through a certain whole number, and you're going to risk on a certain number, and then it has a lower high, and you're going to add in, and then you've got that set risk versus reward. Same thing on a long. If you start long and it starts to hold up and a higher low, you start to add, and you have a set risk. That's all that matters. It doesn't matter, bull market, bear market. Yeah, we've had a lot of huge runs, and take MU for example is one that I always just kind of go back to. It's had a huge run, and this is the first time it's actually pulled back. SPY has had a huge run, and it's the first time that it's pulled back. For that same amount probably happened back in April, and also in January, February range, but it ended up rebounding. And will this snap back up on 200? Maybe not. Maybe we're going to be in a sideways pattern like this for quite some time. The beauty of what we do, or at least how I trade and how most of the traders in the room trade, is we're taking advantage of the momentum as it happens. So, something like GTAT, doesn't matter what the market's doing today. This thing gapped up. It had a lot of morning emotion. We took advantage of it. Loco, it was an IPO. We had unlimited opportunities. Yeah, it was a hard one at first to, if you got too short biased. And at the same time, if you started to get too long biased, this thing's come up from 18 to 43, 42, and it's normal for it to pull back. But the key in this market is not to really concern yourself with, hey, what is it going to be a bear market and that means I should short everything on the pops, or is it going to be a bull market and I should buy all the dips? The biggest thing is, like I said, going back to just having a plan and having a place to stop out. Because take, for example, this past week, the past 2 weeks, if you were long biased and you didn't respect the stop and you kept buying dips, and then you end up getting blown out on a washout just because you were buying a dip, buying a dip, buying a dip, because it's worked for the past 2 years. It's worked. Every single time you buy a dip, it ends up going back up and you end up getting out. But now, if it pulls back and it doesn't quite work, what are you going to do? So that's the whole point. That's the whole key to kind of making a plan and going ahead and sticking with it. It's okay to be wrong. Trading, you're going to be wrong. It's just letting yourself be wrong, letting yourself take that loss. Because if you don't take the loss, then it's basically up to the market to kind of determine your fate. So you can control all that kind of stuff. Stay away from the random trades. I posted a nice little blog entry the other day on investorslive.com, and it was just talking about a couple random trades that I did. And for me, going back 4 or 5 weeks, I was on 52-week highs, total net worth, total everything. Is everything that I've ever made, everything. I was counts at all-time highs, yada yada yada. I'm not trying to quote unquote make back. I'm not trying to get to a certain point. All I'm trying to do is just enjoy my summer, slow, steady, nail the trades in the morning, relax, help members, and see if there's a trade into the close. Point being is, now I had a bunch of stubborn trades, and I'm kind of like back to the grind and whatnot, which is fine. It didn't really impact me. It didn't really bother me at all. In fact, it was nice to write that blog post and kind of show you exactly what dumb trades can do. All you have to do is minimize the bad trades, minimize the losing trades, and just go ahead and ride the winners. All right. So, Frank World, when shorting pops on the backside of a move, is it okay to keep the core on if there's lower highs? If I cover partials into the flush, what would be a decent core size, 1/3 of my position or 1/4? Absolutely. So one of the things that you probably saw on the blog post that when I was trading loco short on the front side, I was thinking that it probably would top out at some point, considering it went from 18 to 35, and obviously I was wrong on that first day, but I was trading around a 4,000 share core, and I was nailing every top and covering every bottom on 1,000 shares. So it was ripping up, I nailed it. Washed out, nailed the cover, 1,000 shares. But what the problem was is I should have been flipped. I should have had that 1,000 core and a 4,000. Now, granted, that number may be crazy for a couple of you. Like, it doesn't mean that that's a normal size. But the point being is your core should be, yes, 1/3 to 1/4 of your position, because otherwise, for me, I was nailing that 80-cent move up. It ripped, I short, pulled back 70 cents, 1,000 shares, made $700. Then it starts to grind and goes up $1, and $700 is now just a rounding error. So point being is you're absolutely right, and it should be only a partial, 1/4 to 1/3 is absolutely right. And the only reason that you should be keeping that is exactly like what you said, as long as there's lower highs and it's not grinding. It's fine to keep a core. It's fine to be biased once you've locked some in, but once it starts to kind of grind, once it starts to hold the higher lows and starts to basically set up like an ABCD, that's when you kind of need to take a step back and say, okay, am I just getting a little too biased here, or big picture, is it still kind of trading relatively weak? What do I want to do with it? Am I up a lot? Should I just take it and then kind of reassess and maybe get back in later on, or should I go ahead and stay in it? So that's kind of up to you on that portion, but you actually nailed it on the head here with as far as the size. How do you best maintain a core position like that? Can you choose between LIFO, FIFO when you sell or cover? It doesn't matter. We're all day traders, so FIFO, LIFO doesn't really matter. At the end of the day, you're going to be flat, and you should talk to a CPA. But the reality is you should be you make $1,000, you pay taxes on $1,000. There shouldn't be any. You buy here on average and you sell here on average. Whatever that net gain is what you should be paying taxes on. So if you're worried about FIFO, LIFO, and all that kind of stuff, you should probably get a CPA and just maybe chat and have a conversation. I'm not going to get into taxes and whatnot here, but it's probably something you should definitely think about. But it doesn't really matter what your average is if you're trading around the core. If you're making money, you're making money. So when you do 1/3, 1/4 size, are you using market or price limit? You need to watch the DVD or you need to do the new members page. I always use limit. Any other questions on the backside of the move and trading around the core? I'm not getting into taxes. You guys can talk about that with a CPA. All right. Dear Nathan, I know the basics of time and sales list, but I want to know how you use it in the trading routine and time and sale list. For which key elements are you looking for before and during the trade? The only real benefit of a time and sales is when you're looking at maybe a key area of support where a bid might show 100 or 500 shares, but yet they're soaking in 1,000, 1,000, 1,000, 1,000, 5,000, 5,000, 10,000, 5,000, 1,000, 1,000, 1,000. And you can tell that, well, hey, there's hidden support here. Somebody's got a much larger bid than 100 shares, and they're just soaking everything that comes in. So that's really the only way that I would really use it to my advantage. What I've told everybody in the DVD, what I tell everybody in every webinar and every single time I get asked this question is put it up on your computer, put it up on your screen, level 2, time and sales, chart. If it helps you during the trade, use it. If it doesn't and you start staring at it and you start trying to figure things out, don't try to figure things out based on what's going on. Just use it as an added added tool, something to kind of maybe give you some type of insight as to exactly what I said, where there's maybe 100 shares showing and you can see all the trades going off, but it's holding support. So the best way to learn it, the best way to get used to it is just by watching. The same thing with level 2. A lot of people always ask me about level 2s and things like that. In the DVD, I tell you exactly what to look for, how to take it in, and how to what kind of things that you should be looking for, like what days, parabolic moves, days that things are tanking, especially on OTCs. OTCs you can learn a lot, but there's no right or wrong answer. It's really a subjective answer. It's something that needs to be learned over time, and that's how you learn these time and sales and level 2 and stuff like that. I can't tell you, yeah, if the bid takes in X amount of shares and it's whatever, it's a yellow print or a white print, and then it hits the offer a couple times, blah blah blah. It doesn't mean anything. It's more about what does it mean to you, and can you figure anything out from there? Does it help you? If it's just noise to you and you get all thrown off by seeing all the numbers, then just pull it out. For some people, like Muddy, even John Welsh, I don't know how they do it, but they literally do not look at intraday charts. They look at daily charts. They've seen a daily chart, during the the scans at night or during the day, but the reality is they don't look at an intraday chart, which is beyond me. But again, it takes out a lot of the noise intraday, and if they're looking kind of the bigger picture trade or things like that, it might work for some people. So for those guys, it works. For me, I think they're crazy. I have a small account, been trading small and taking small losses, although with commission it adds up. Even if I'm winning, I have tried watching you guys trade and learn from you, but when I trade myself, I still lose. Always choose the trades from your chat. You don't win either, or you are small, so I can add full size later, which I can't really do since the commissions would be even bigger. What would you recommend if I can only trade one size, and how would I know that the trade is in my favor? So what I always recommend to people is, and you'll see me kind of be a broken record about it, when I plan to scale into something, when I'm trading something on the front side of the move, I always kind of tell people, if you're looking for one entry, wait for over and under X spot. Wait for it to peak out a few times at this level, and then you can go ahead and get short and risk based on this price. And that's the type of trades that you should be looking for. A high probability trade, yeah, sometimes it might not work, but a high probability trade that has a set risk versus set reward. You can go ahead and start in and use the proper risk versus reward, but it's going to keep you out of that commission burning type where, you know, I might be adding in, adding out. Even ISR today. You know, ISR, you know, this morning I was in and out a few times just because I wanted to get in there. I got short at this level right here, and then my goal was, you know, short into pops. Ended up peaking out at the same spots pre-market, but it had washed out and ramped back up, washed out. I covered some, started to ramp back up, covered some, and ended up finally covering the rest. I just wanted to stay out of a potential, you know, grind up here or here. Since it was holding relatively well, I've been in this thing in the past, and sometimes it just kind of goes sideways and starts to perk up. So, you know, those types of things where I might be scaling in and out, in and out, in and out on the pops. Oh, is the audio all right? I'm plugged in directly, so it should be good. Let me pull it closer. Good. All right. But the point being is something like, you know, something like this trade. You know, you probably want to stay away from that. But something like KNDI, where if you go back to the chat logs, where I said, you know, at this point, you want to wait for that 19 area to top out. Once that 19 area tops out, you can go ahead and get short, have a set risk versus reward, whether it be 1910s or on the higher days, and go ahead and let the trade work for you. Same idea for, you know, all trades. You know, something where you let it run, and sure, I might have short, you know, I was shorting in here a little bit, and I covered. I got some nice covers at 35, and I got some nice covers here before it went, before it broke out nicely. Derek had a nice long, but you know, I short a few at 1914, 1915, and Splendors had a really nice one. He got right in before the big offer came down. But is that trade for you, somebody that's looking for one entry? No. What you want to do is just wait for, okay, the trade to pan out, started to peak out a few times, just like I wrote, 19 over and under, over and under, over and under, starts to fade off. Go ahead, get short, risk on the prior highs. And that's a high probability trade and in a one entry type setup versus something where you would scale in and potentially burn your commissions. Any other questions on this one with a small account and burning and whatnot? And at the same time, don't, I know this sounds really stupid because you're here to make profits, but if you have a small account and you're just burning commissions, don't underestimate the power of burning commissions. It's not a bad thing when you're learning. It's better that you burn through commissions 5, 10, 20 bucks at a time than you funding your account with 20 grand and blowing 10K just trying to learn. So I know it's backwards thinking of what you're trying to accomplish here, but it's not a bad thing when you're first starting out to go ahead and start small. I would always suggest starting small. Burn those commissions up. Who cares? Let the broker win. If you're buying 100 shares, selling 100 shares, buying 100, whatever, and you netted out 40 bucks on the day and you netted out 50 bucks of commissions. You lost 10 bucks. Who cares? You know what? You're learning. You're proving to yourself that you understand the concepts. You're proving to yourself that you bought lower, you sold higher. Done. As you grow confidence, which is also part of this whole game, then you can slowly scale up from there. And when you start to scale out, then your obviously profits and losses might get a little bit wider, but if you're doing the right thing, there's going to be forget the name of it, but it's going to start to push off from where the commissions are, where you're going to have that little curve away from your commissions, where you might have those same 50 of commissions, but you've got 200 of gains or whatever. And then you slowly start to gain confidence, and sure, you might have losses along the way and whatnot, but then that same 50 of commissions is going to turn into $500, and $100 of commissions turns into $1,000 of gains. So it's one of those things that I know it's aggravating to continually watch yourself burn commissions, but if you're learning and gaining confidence at the same time, you're gaining. And I know it sounds really weird, but if you're burning commissions and you're learning a hell of a lot at the same time, you're gaining. Let's see. For small accounts, would you advise not to go long morning parabolics for small accounts, wait for a setup to develop? I would always, I mean, the morning trades out of the gate, the first 15 minutes, are really, you know, you got to be one step ahead. You got to understand. You got to be able to react on your own. If it's in, I always tell people when they PM me, and it's not to offend anybody, but if you ask me at 9:33 a.m., is this a short or a long? If you have to ask, you shouldn't be trading it. And it's the same thing with like an OTC. You know, what do you think of this? I know it's a pump. Do you think it's a good buy? If you have to ask, you shouldn't be trading it. So once you're able to kind of make that decision on your own, morning parabolic or morning washout and things like that, that's when you're ready to trade them. Yeah, they could be awesome for small accounts, but you have to understand how to trade that trade. And if you don't know, if you need somebody to kind of give you guidance as far as, you know, where to stop out, where to go ahead and take it off, if you can't make that decision on your own, it's probably better just to wait, watch, and let, like you said, a solid setup with a set risk versus reward, you know, go ahead and set up. Can we talk about summer trading, when it starts and when it ends, and how you handle all the fake moves? Any advice for transitioning from part-time to full-time trading besides what's laid out in the DVD? So first of all, it's summer, and I mean, it's been the craziest summer in a long time. Everybody says sell in May, go away, and I mean, the reality is we can't even keep up with all the moves. So yeah, I know lull between 11 and 2 is kind of you know, there's not a ton of action, but every single morning by 11 a.m., I mean, we've nailed a million things. So I really wouldn't worry about handling summer trading. I really wouldn't worry about when it starts and when it ends, because all that matters is if you have moves, you have volume, and you've got action. So I think it's something not really to worry about, and you just go ahead and relax and trade the setups. And I think we've had a fairly active summer. Yes, like I said, lulls are a little, you know, slow, but do something else. You know, work on doing a blog. Work on talking about how you overtraded and how you're going to be better. Do a blog like me where, you know, you talk about how you lost a shitload because you were an idiot. You know, all you guys, you know, the whole thing about trading is also kind of developing. You got to hustle in different ways, because the best way to be a trader is to have the you got to detach the emotions from your money that you're trading with. So what that kind of means is, you need to kind of take a step back. If I talk to my friends and my normal friends around here, and I was like, I was down $300 or I was down at $900 and then I made $3 grand, they'd be like, whoa, so wait a minute, you were down $900? So, wait a minute, so you actually were down before you, and they wouldn't be able to wrap their head around the fact that maybe I was down 500 or 900, but I knew that it was going to be a $3 grand type trade. It was worth the risk. And obviously that's a bigger number for a lot of you. Maybe it's $100 for a $300 reward, something like that. But if you're still at the point where $50 matters and stuff, you got to start thinking of other ways to hustle and be able to give yourself the best chance that you have. And one of the suggestions that I write in the DVD is go ahead and start a blog, link to all these affiliate sites, link to all these kind of things, and start making some money on your own. Because you know what, before you know it, if you write blogs every single day, you're going to have daily readers. Maybe you inspire somebody to join a service. I'm not preaching you to promote all these newsletters and stuff, but my point being is if you're doing that and people end up joining, you're going to start getting checks from people that from affiliate services and stuff that's going to pad your accounts, and it's going to give you the ability to go ahead and detach your emotions from your trading accounts. And that's really the biggest thing that a lot of people don't understand. You either got it or you don't. And the best traders that I know, have big accounts, have they have their stack in their bank account, and they don't need to come to the market each day for to win. They don't need their rent money. They don't need to pay their cable bill. They don't need to pay their heat bill. And a lot of the people that join, they've got debt, and they've got their school loans and all that kind of stuff, their rent money. There's so much things that is attached to what that $5,000 or $10,000 in your account means. That $10,000 account, and then you just made a trade and you're down 300 right now, but it's a good trade, and you got to let it kind of play out. Well, that 300 could have been part of your rent. It could have been your heat and internet and all that kind of stuff, Bill. And that's what goes through your mind, and then you're like, shit, I got to stop out. But when you can detach that and you can go ahead and just let your trade plan work out, that's when you're going to go ahead and see the results, see the difference, and be able to kind of detach the emotion from the money, like I've been saying. So point being is start a blog. It's free. You write about it. You write about your experience in chat, profit or loss. I don't care. And I'll retweet you. Other people will retweet you. Other people will get inspired by you. And sooner or later, you're going to start to get checks. It's going to give you the ability to go ahead and even if it's $100, $200 a month, guess what? That covers your platform for, SureTrader or whatever. You got to think small, and every little bit helps. So that's my only thought for small accounts and kind of transitioning. The last thing, what you're asking as far as transitioning from part-time to full-time, besides the stuff that's laid out in the DVD, I mean, the main thing, like I've said all the time, is make sure you've got 2 years' salary in the bank. And, that before, I get a lot of emails. I get a lot of people that, join, and Cam can probably even say the same thing, but they, because he talks to a lot of people regularly, and some people that join, some people that don't, but they contact us and they say, I've decided to be a trader. I'm going to quit my job and I'm going to be a trader. I'm going to be a stock trader and make my money that way. You can't decide to do that, because what if you don't understand? What if it doesn't work? It's not like, oh, I'm going to work at this place one day. I'm going to work at this place one day. You got to learn, and if it's for you, it works. If it doesn't, then it doesn't. So you've got to give yourself the best chance that you can to kind of understand. It's not going to happen overnight. It's not going to happen as far as as quick as riding a bicycle, but it will happen if you study and if you ask questions. Ask me stuff during the day. If you have questions about a trade, a lot of times I'll get questions about HTCH today, and some question around this area here, and they're like, yeah, I'm thinking about a short or a long or whatever, but had the morning move. There's nothing else. There's no volume. Look at the volume down here. Just pass the ideas by me. I don't mind. You can PM me. Worst case scenario, I always tell you, hold on, I'm in a trade or whatever, or you can sense it in chat. But I always reply. I'm always here to help. And like I said, worst case scenario, I just tell you, hang on a minute. But sometimes you might get in there and you're like, oh yeah, it was flatlining. It looked like a good trade, but there's just no volume. So I like volume. I like trend. And I stay away from the randomness. So that was an example of one today that somebody was asking me about, which ended up saving them, probably burning some commissions or maybe a potential loss. But as far as the websites, I mean, Profitly is good for if you go and join there as an affiliate, or if you have the DVD, if you go to my site and then you click affiliates, you can join up and get an affiliate link and sell on your site. But again, the point is, I'm not trying to tell you guys just to promote service and stuff. I'm just giving you the ideas of how to give yourself the best chance at this, how to take advantage of the social networks, and go ahead and write about your journey, write about your profits and losses. And the other thing about writing about it is you don't really want to embarrass yourself in front of people that might be reading it. And not to put added pressure on you, but do you want to tell people about how you broke this rule, this rule, this rule, and then you averaged down and then you blew your account? Probably not. So sometimes it's good to go ahead and do that. It holds you accountable because you want to prove that, you're taking this seriously, you're trying to learn, and with that, you're able to I don't know, succeed and give yourself the best chance. So anyway, when the market gets dicey, as it has been lately, what is your preferred safe haven? When shit started to hit the fan today, you alluded to being cash and sitting on your hands. Did you just happen to be more cash at the time, or will you play stocks that are showing relatively strength, or even play a volatility index? So it depends. I mean, if it's out of the gate and we can take advantage of the morning emotion and stuff like that, great. If I'm up nicely on the day and the market starts getting wild and I see some opportunity, I'll trade it. But the biggest point is, even take like FSLR today. Bad timing on T530 had a positive type thing that came out, and I think the biggest tell was the SPY was tanking right away. So I think that's the biggest thing, is when I warn like that, is you're not looking for long opportunities. If the SPY is dropping off a cliff, if the SPY is doing this, do you want to be looking for something like FSLR or Twitter or Facebook or Google or whatever? Or even GTAT? Do you want to be looking at something that not necessarily follows the SPY, but would be impacted by it? Do you want to be saying, oh, you know what, Facebook looks like a breakout, I'm going to buy it when the market's doing this? Absolutely not. And that's the biggest thing, I think, to be able to take away from when the market gets dicey, what you should be doing. You should kind of go back through and rethink your trades. Am I long this? Is it kind of like iffy? Is there like right here, the market starts going nuts down. Do you want to be buying a breakout or trusting this for dips? No, you want to probably go ahead and just get out and wait for things to settle and make a move from there. So that's the whole idea with when I warn and things like that, because a lot of people over the past couple of years are just so trained to buy dips that they don't really know how to react when something like this happens. And sometimes you just you just need that one little nudge that's like, hey, make sure you have a plan. How do you distinguish between squeezing or just covering price action versus actual buyer price action? It seems as though oftentimes squeezes don't have much follow through. Take Loco, for example. I bought at 3:04 p.m. upon the breakout from 34.65 to 34.80, but ended up getting smoked as it immediately sold off into the close. So you bought at 3:04. A couple things to understand here. Well, it had a nice, yeah, you bought towards the peak. Remember that this is under the short sell restriction, so you don't want to be buying breakouts, especially, this was right, that, as I had said, that was a big break from earlier, and I think at 34.50, maybe it was this time, yeah, 34.50 I had suggested taking some off. But remember, under short sell restriction, once that's on, the key is to be buying the washouts, not buying the breakouts, because a lot of times they'll go ahead and just trap, shorts into it and then push them into a breakout, and then they pull the bid. And that's what you need to kind of be aware of under the short sell restriction. That's why, I mean, not to be broken records about alerting the SSR, is my sound still okay? It's telling me that it might be sketchy. Sound fine? All right, good. But with this, that's why I always kind of remind you not to be broken record about, oh, SSR is on, SSR is on, SSR is on. But you got to kind of understand the difference between, what happens and how things are trading under the SSR versus when it's not. And something like this, the only real benefit that you have is into washouts. Otherwise, dip buys on the trend, because you can see when it starts to grind, it rips up, and then as soon as that cover is done, or as soon as that bid is gone, slam. Grind, speeds up, slam. So it's just, you need to understand when it's under SSR and how to react to that, and that's why we talk about it, and that's why we don't chase those breakouts. Yeah, Eric was shorting it all day, and he just wanted to try the long, and I don't know what he did with it, but sometimes it's a decent trade. Once it has bottom, once it starts to grind, and you can see here, this is kind of when I said it in the chat room. Once it had a higher low, you want to be buying dips, and I think if you check the chat logs around 130. 140. I had said, at this point, watch all dips for a buy, not watch all breakouts for a buy. And I think that's the biggest difference, especially under SSR. You don't want to be buying the power. You want to be just like if you were looking to think of it. If you were trying to short this thing, you wouldn't be shorting into the pulls. You'd be wanting to short into the pops, because you're taking advantage of when it pops under the SSR. So with that said, same idea. You want to exit. You want to exit into the pops. Quote unquote squeezes, as far as these little pops. These little pops are usually they'll hold a solid bid until a cover comes in, and then slam back down. Solid bid, squeeze up. You see the volume come in, then slam back down. You see it over and over and over and over. I was wondering if you have any advice on reading the order flow or ticker tape while trading, especially around important support resistance level during the day when you say X price over and under. I know you don't use it as a primary indicator, but do you use it as support the direction for your trade? For example, when you enter a trade, what would scare you on level 2? And the tape to potentially get out or support your decision and stay in. Like I said before, I kind of already answered it. If it helps you, use it. If it doesn't, then don't. I'm not a quote-unquote tape reader. I think on OTCs you can kind of use the whole quote-unquote tape reading to your advantage, but I mean, I'm just looking at more of the bigger picture. Does it hold over under 19? And how does it react? I think the biggest thing as far as tape reading is, you know, how it reacts to big orders, you know, where KNDI had, you know, 39K offers, 40K offers, 50K offers, and it was kind of grinding up, and then it just absolutely slammed down. Had they just absorbed that and continued on, that'd be one thing, but what I was looking for is started to refresh sell, and then all of a sudden the offers went away, but then there was still a heavy fade, they continued to kind of grind it down. So do I call that tape reading? Do I call that order flow, trying to figure it out? I don't really know. I would just, if it helps you, or if you're trying to figure it out, great. But like I said, I mean, it's just look big picture, try to think more simply, over under 19, risk on the prior top, things like that. The simpler you make it, the easier it's going to be. All right. What signs were in Loco that made you think it was a good bounce the first time around at 10:15 a.m.? I see from the chat logs that you scaled in and added once. It became more clear that it had support. However, I did not play long because I thought trending down could easily have a big wash. 35 failed to hold. What did you see differently that made it a good setup or a bounce? It was just reacting to the washouts, and you know, once it held a higher low, then that gave me the ability to go ahead and risk on the lower days. So you can size in, again, still small, with a set risk first reward. So same thing that I said earlier, and you don't want to be buying a stock that's trending down unless you have a plan, unless you have a reason to be able to risk, unless you have a double bottom, a set risk on the lower days. So you had the washout, good entry into the washout. You know, that's your potential edge. Ramps up, takes some off, pulls back, adds some 36 range. You've got that risk versus reward based on the lower days, like I mentioned. Ramps up, go ahead, locks them in. Started out pretty well, and then you might have double bottom here. Yeah, I know it's not to the penny, but now you can go ahead and look for another entry if you see that it sets up. I forget what I did around this area, but I know I had sold 2/3 and I held a third through most of this. But like I said on the video today, for the elite peeps, like the basketball, I always use the basketball analogy, and you mentioned that there could be a big wash on the 35, and if you go back right about here, that's exactly what I said, that there's probably, if 35 breaks, there's going to be a lot of volume and a quick wash, and you can see that that's exactly what happened. And the way that you can kind of predict that yourself is just based on the price action. And you can just draw a line here, and you just figure this is like the basketball court, where there's this baseline. And you've got the basketball, and you slam it on the ground, bounce, 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 and then it starts the little dribble against the floor, this being the floor. When it starts that little dribble, that's where you either need to, number one, think about your exit, or number two, if you're thinking about short, start to kind of plan a short based on what risk. And that risk you can use off this 50 over and under number, where you can short into pops and use the prior peak, anticipating it breaking the floor. And that's why I warned at this area here that, look, if it breaks that 35, it's going to be a fast snap. And that's exactly what happened. Short sell restriction came on, continued to wash out, and then we finally had higher lows. But going back to your question, it was a reaction to what was happening, reaction to the washouts. And as long as you're just taking advantage of those fast moves, you'll probably be okay until it starts to get into a little consolidation pattern, and then you need to kind of take a step back. Are you in it just to be in it, or are you in it because do you have a reason? Go ahead, take it off and wait for a new move, and you got to kind of think of what the big picture move is once it starts doing something like this. Well, when it's doing the whole rubber band technique type thing, bouncing around, that's when you can go ahead and take advantage of the emotion. The double bottom happens quick. Any tips for recognizing it when it happens? I can see how you would know it's a double bottom until a little bit after the second bottom. I mean, that just came by. It just ramped up to 37s almost and then came down to 36. So I had just taken some off into the ramp, and I was just going ahead and using a little bit of house's money and risk, anticipating it into that washout. So could it have gone down? Absolutely, but I wasn't trading size, and I made that clear. So, and I won't be, on Loco and all these other ones with the big range, not unless I have gains on my side or house's money. I'm not going to be looking, to just buy washouts with size. So, yeah, I bought into the washouts, but was there a lot of risk there? Not really. Just because I started in small. I think the first couple times it was like 300 to 500 shares. Sure, nice bounce, $300, it's great, but if it pulled back a buck, I don't care. So, so yeah, that's I think that's a good answer to that one. If you were new, what setups would you focus on? I'm trying to follow too many stocks and need to zero in on a specific strategy, then start branching out. First off, I would get the DVD because it tells you the difference between what are new member type things and what are more advanced. The washouts, the parabolics, are the ones that you probably want to stay away from. Yeah, I trade them more often than not, but it's something you kind of need to build up to, and it's like I was saying before, it's one of those things when you don't have to ask the question, that's when it's time to go ahead and start to trade it. Once you can kind of anticipate it on your own and have a game plan and things like that, that's when it's a good time to get in there and play them. But as far as what setups to focus on, this would be something just like the KNDI example. You want to look for a late day type fade setup, and if you don't know what those are, again, DVD or the new member page, or the ABCD type setup where ABCD can happen many times a day. It can always ramp up, consolidate, start to grind up, higher lows, and you can get in there, set risk versus reward. And that's really what it all comes down to, is being able to say, all right, I'm going to risk X because this is a high probability setup. And it's not always going to be right, but the way that it works is if you're right once, it can pretty much take out 3 losers. So that's kind of the whole idea about these high probability type setups. They're not always going to be 100%, but as long as you nail one at a 3 or 4, it's a profitable thing. What are your views on the general market right now and for the short term? How do you suggest it should be played? Just the way we've been playing it. Come to the market every single day with a plan. Oh, I should go back. Well, actually, I'll do these both together. This one I'm trying to follow too many stocks and kind of need to zero in. This says a specific strategy, but I'll couple that with this question right here. And as far as, like I said, you need to come in with a certain plan, but you need to have the stocks that you want to watch from the watch list, from the pre-market. Every morning we're here 7, 8 a.m. just sifting through stuff. I'm trying not to press buttons until open, but doesn't mean you can't start developing a plan. And usually by 9 a.m. I like to start to put out my first plan, and I take down the watch list down from 10 to 12 stocks down to maybe 2 or 3, and then or like 2, and then 2 new ones from the day. So now you're talking about 4 or 5 stocks, which you can all watch on one monitor. Not all of you if you've got one 15-inch monitor, but maybe 3. But some of you guys, that depending on where you trade at, if it's a short and you don't have borrows, take it off radar. If it's a long and it's a washout and you're a new trader, take it off radar. So now you start to take off, take off, take off, take off, and all of a sudden now you've got 2, 3, 4 main watches. And a lot of times, sometimes, you know, the simplest things that I say, people are like, oh, that was so helpful. And the reason I say that is I think Fast One said it, or somebody else, I forget who, but what I just said, if you don't have borrows, why are you focusing on it? Why are you focusing on it in the morning? If you have SureTrader and I have Centerpoint and I have borrows on MBLY or Loco or whatever, and you're staring at it and you say, or you PM me and you're like, shit, I don't have borrows. Why do you have it on radar? That's one radar, that's one screen that you have. You're watching Loco for a reason you can't even trade it. So pull it off. Put something else on it that you're going to potentially trade. And it's those kind of simple things that I say sometimes that people say, no shit, I didn't think of that. And now that buys you a whole nother screen spot for a ticker that you potentially will trade. I know we want to trade it, but you know, if you don't have borrows, pull it off radar. And then that's going to give you the ability to watch 2, 3, 4 of the main ones that you're most comfortable with. Let them set up. Don't trade emotionally, and go from there. Exactly. And that took ISR off radar today just because there's no borrows. So that's something everybody can do, and you should. The other thing too is you should always know that before the market opens. I see a lot of people, they're focused on a stock, and we haven't done it lately because we kind of molded chat into being good people, but you know, I'd end up shorting something, and then there'd be like four or six messages. I don't have borrows, I don't have borrows, I don't have borrows. Well, you should know that ahead of time. Now you just wasted an hour of, you know, watching the stop for the short. Then you went to hammer the short button, and it says not shortable. You could have known that at 9 a.m. So these little simple things buy you more screen real estate so that you can go ahead and watch more of what you potentially will trade. So that's kind of molding those two into one, and how to condense your watch list and things that you're going to actually trade. The other thing is, you know, are you looking at momentum trades, or are you looking at more bigger picture trades? And you know, that's one thing that you kind of need to consider. Automobile City, you know, for example, he does a lot of swing trading in Michelle's room. He might be looking at this nice breakout, but he might be looking at like a longer term frame, or a slower type of setup. So maybe he watches a couple ones to scalp out of the morning, and then he's got the other ones secondary radar that just he needs to know when they trigger. Like if this thing breaks 3, that's when I care about it. So maybe he can set an alert or set something or whatever on the side, whereas out of the gate he doesn't care about it. And if you can separate your swing ideas from momentum trades, you know, just it is. So you know, do whatever works for you. Oh, actually, do you guys have any questions about what I was just saying before I move on? Are there different chat rooms at the same time other than the main chat? Yes. If you go on Profitly and you click chat, you've got the regular chat, the OTC chat, and the swing chat. And if you go here, you've got momentum chat, swing chat, OTC chat. So you've got all three, and you know, I would definitely suggest checking them out, depending on the type of trader you are. And yeah, Automobile City and Michelle, he's been a big help. Michelle has told me anyway, in the swing room, and you know, they've got a much more, not necessarily laid back, but it's a more laid back approach. You know, it's not like, hey, this is moving right now, boom, 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 and you gotta react real fast. It's more, here's the chart, here's the daily chart, this is the idea, and you know, the bigger picture idea, swing trading. Do you wait for the whole number breakout confirmation to place a trade? It depends on the trade. Just we talked about it on KNDI, but I mean, it's all relative to the trade at hand. Are you anticipating a breakout? Are you anticipating a washout? Like, what's your plan? As long as you make a plan, you know, a whole number, $half mark, whatever, it doesn't really matter. What kind of advice would you give traders that have an account size anywhere from 3 to 6K? How much would you risk losing daily? What kind of setups would you look after? What is the most efficient way to build a small account to a healthier size for traders that are serious and trade consistently? How long of a learning curve can we expect? For me, it took me 6 months. Now, were there other traders that I was learning with at the same time that are no longer in the game that didn't make it? Absolutely. So for me, it took me 6 months, trial and error, and you know, I clicked. I'm a visual learner, quick learner. You know, can I read and write well? It's not my. I'm not the best at that, but I know how to trade. So I was able to, you know, do that fairly quickly, and realize that I was good at it. The only thing that I was bad at was cutting losers and bag holding everything. And I would just hold everything down to zero, refund my account, and you know, kind of believe just like all the hemp traders and all the marijuana investors. Obviously, they've made a lot on the way up, but they're just, you know, slowly bleeding their accounts all the way down to zero, as you've seen on, you know, VPOR. I've been wrong. Even though it's at 52-week lows, I'm still wrong, according to the wolf pack. And, you know, hemp, hemp and all these other ones, you know, I would be like them where, you know, I would be buying, you know, before this move, I'd be up huge into the 30s, and then I'd add, and everybody was wrong. They were all wrong. This thing's going to be big one day. Wrong, wrong, wrong. And then it goes down to sub-penny, and I have no money left. So that was kind of my learning curve. And then I figured out that, hey, you know what? Cash overnight is awesome. Don't carry your issues from today into tomorrow. And, you know, that really helped me. So it took me 6 months, and look, it took me 10 years. I'm still learning today. So the biggest thing is to never stop learning. And I still make mistakes. And I think the biggest thing is to, you know, a lot of people join the room, and you'll see them. A lot of people have come in, and, you know, it's me. I made this call, and, like, shut up, dude. Like, we don't care. You just posted something. It was, like, 3 minutes ago. You know, give us real time or don't post it at all. And likewise, you know, pat me on the back like I called this or that. It's not about that. And a lot of people come into this and just want credit, and they kind of lose focus that, like, dude, it's your account that matters. It's not what people think of you, and it doesn't matter what your alias does online. It's what your account looks like, how you're trading, and a lot of people don't understand that. They care more about how they're perceived online than, you know, their profits. So I would really just focus on what you're good at, focus on learning and soaking up as much as you can, and not so much about, you know, how long it's going to take and being somebody. You just have to learn, grind, slowly add size when you're comfortable, and go from there. And like I said, it took me 6 months. It could take people a lot longer, but as long as you ask questions along the way, you're going to cut it down. I've said, and I firmly believe this, but I think that you can cut your learning curve with the DVD down to 3 months. And does that mean you're consistently profitable? No, but you're not consistently losing. Yes, you're going to have your, I'm not guaranteeing that either, but you know, you're going to cut out the whole learning curve type you know, issues that I went through, that other traders go through, that you know, we go through on a daily basis, that the holding down to the 52-week lows and all that kind of stuff. So 6 months I would give yourself. You're either going to get it or you're not. And like I said earlier in the account, just focus on the high risk versus reward, high reward versus risk setups. Focus on the the 3-to-1 type ratios, and focus on good charts. And stay out of the randomness, stay out of after hours, stay out of all that kind of stuff. And you know, it should be a decent experience. And if you have trouble along the way, reach out. But the biggest thing is you know, and definitely read that read the post that I did the other day. And you can see here, you know, one of the trades that I talk about in the DVD was this RSOL trade. And you know, this is just kind of, you know, for some people, this could take you out of the game, and that's it. You're done for good. And I think that the biggest thing to really understand or take away from this blog post is to have that number. And you know, people that have a $3,000 to $6,000 account, a $5,000 to $10,000 account, is it a $300 number? Is it a $500 number? Whatever it is, if you ever get into a trade where, you know, you're like, shit, I shouldn't be in this, it's starting to go against me, I'm down more than I was looking to do, I have to get out, this is my number, I got to get out. It's going to save you more often than not. And Eric will tell you right now too, you know, we've gone through it a million times, and he'll even hit me up and be like, damn it, man, I'm down. And before, he used to, it's funny how Eric's changed. He signed out, damn. But you know, before, like on FU, if you remember this name from a long time ago before it halted, I mean, he wouldn't hit me up until he was down like 15 grand on some stuff. This thing right here went up to, you know, 11 bucks. And he was down, I think, maybe 40 grand before it started to pull back. And he used to not hit me up until it was 20 or 30 grand. Then he ended up making like 60 on the way down or something. So, I mean, it was a ridiculous trade for him. But the point being is now he'll hit me up and he'll say, oh, shit, man, I knew I shouldn't have done that. And I'll be like, well, what are you down? And he's like, 1,200 bucks. And I'm like, wow, what a difference. What a difference that before it used to be 19 grand and now it's 1,900 bucks or whatever. But the point being is you've got to have that number in your head that's going to keep you in the game, because all it takes is one trade that's going to, you know, ruin your ability to make it as a trader. So for me, you know, yeah, I can absorb a 50 grand loss and be fine tomorrow, and it's not a big deal. Do I want to? No, because then it takes away a month or two's gains, and you know, I'm in a bad mood, and I kind of feel like what did I just work for the last 2 months for? So for me, that number is 10 grand. I don't want any time that I'm in a bad situation and I know I shouldn't be there, 10 grand's my number. And no matter what, cut it off. Whether that's 9 or 11 grand or whatever, plus or minus, don't turn it into a 20 or a 30 or a 40, because I did that so many times since 2010, $50,000 to $80,000 type losses, that it's not worth it. And especially with a smaller account. Now bring it down a scale. So if you've got a $100,000 or $10,000 account, is $500 going to take you out of the game? No. So maybe that should be your oh shit handle. No matter what, if you've got a $10,000 account and you're down 500 bucks or maybe 1,000, whatever it might be, no matter what, you guys should. And I did this one of the other webinars, but pick your number today. Whatever that number is, no matter what, you get out. And that's going to save you so many times, because $10,000 in this market might be, you know, that's what I did on Monday. And it might be only a trade away. It might be, and obviously 10 grand is not for everybody, but that $500 trade might be, boom, tomorrow you make $1,000. So now you were wrong. You weren't expecting that $500 loss. You took it off, and now you just doubled it up and won tomorrow. So have that number, make a plan, and stick to it. Let me see if you guys asked anything on topic. After purchasing your DVD, do we get a hard copy? No, we don't have a hard copy. That's not available on Profitly. It's streaming. I prepaid 1 year. All right, let's get back to questions since you guys are all asking all random stuff. How much time you took to finish consistent green trading NASDAQs? How much time you took to... I think you're asking how long it might take to be consistently green with NASDAQs. But it's all about minimizing losses and really focusing on the winners. One thing that I've really worked on this year is, yet again, a very, very, very simple concept. And Modern Rock always, had mentioned it. Add to winners. Seems so simple. We're so easily adding to losers every single day. We're comfortable. We're patient when we're down, when we're red, and yet when we're winning, we take off profits. We take it out, and we're done. Why can we sit in a red trade, be down 500 or 1,000 bucks, and hold it all day, 9:30 to 4, but yet you can't hold a winner from 9:30 to 4? It doesn't make much sense. So one thing that I've been trying to do is start in small and then add to the winner. Don't have a huge amount of size on round one. Add to that winner. Use the house's money as the risk. And then that's when you start to scale in, and you use that house's money as your new risk, so that it's basically, and I don't want to say a riskless, but it's a, and I always call it house's money, but if you're up 500 on a small size and you start to add in, you start to use that house's money to be able to, use that to let the trade work for you. And in your opinion, what is the minimum account size, position size to trade your style and finish consistently green? It's not about finishing consistently green on any account style. It's whether or not you get it. First off, it's not, how much money do you need to be consistently green? It's, do you understand how to trade? Do you understand the concepts? Are you buying low, selling high? Are you shorting high, buying back lower? Are you getting it? And you can burn commissions all day long to make sure that you understand it before you start using real numbers. Somebody asked me today with a $600 account, what kind of trades they should focus on. And I said, honestly, you should probably focus on hustling, trying to make money wherever you can, and just trade small, trade the motions, go through it. Whether or not you're going to make money right now, who knows? If you burn commissions, you lose $10 a day, great, you're learning. But keep saving up, keep saving up, keep saving up, so that you can give yourself the best chance you can. Because be realistic about it. Don't come here and try to turn $600 into $1 million. You need to be realistic about your expectations, and from there you can go from there. But give yourself the best chance. Don't come here with, if you're just starting out, don't come here with a bunch of money and then put it all in the market. Start small. Prove to yourself first that you can do it. Let's see. Do you use that same number for daily loss? Yeah, I mean, usually if I have a shitty trading day or something like that, I'll probably call it quits and come back the next day, because not that I get emotionally off. I mean, I'm pretty good at disconnecting from what 5 or 10 grand is, which I think is what makes me a better trader. But I think that a lot of times there's not much good you can do after you lose that. You were wrong during the day, and why try to make it back during the day when my strength is from 9 to 11 a.m. Why not just call it a day, finish it up, and come back in the morning, and come back clear head, relaxed, and go for it. So I mean, you got to know your strengths and weaknesses, and my strength is 9 a.m. to 11 a.m. If I didn't have a chat, I'd probably trade 9 a.m. to 10:30 and be done, and do something else with my life during the day. So that you got to kind of realize where your main strengths are. Is it in the morning? Is it during lull? Probably not. Is it into close? When can you trade? And what are you best at? And that's what you gotta focus on. After you are in a trade, do you have your exit orders already in? Sometimes I do know how you are so. Sometimes I do know. I think you mean don't know how you are so fast on exits in the morning trades for the first 15 minutes or so. I don't use any hot buttons. I don't use anything. I do everything manually. Sometimes I will put in orders, and then I can change them. I can always, right-click, edit, change the price. But most of the time, it's all point and click. DAS Trader and Sterling, you can just point to the price and click and sell. And if you go through and actually spend maybe a Saturday or even the lull going through the different options on there, you can fire it up and make it pretty lethal trading arsenal. I mean, it's pretty good options that you can get in there. You can change the routes. You can change the share size. You can change all kinds of different things to automatically do everything. If you want to always show X amount of size, whatever you want to do, it will automatically set up and take care of it for you. And keep in mind, all those things are one less click that you've got to do on your own. That's my main issue I've been having, is knowing how to be patient when I've nailed a winner. The biggest thing here for me is to go ahead and take some off. I'm not going to be able to hold the full size from bottom to top, but a lot of times if you nail it, that first move, that if you were anticipating, let's just say an 8 breakout and it rips to 817, take off half. Let yourself, lock some in, gets rid of the jitters, gets rid of, the emotion on the trade, and let the rest go. On this GTAT, falls down to 1520s, take off 1,500 shares. Let the rest ride. You're gonna lock in that, let's see, 20 cents. So you're gonna lock in that $300, and then let's see what happens. How should you scale into a winner? When I am in a trade, I tend to wait too long to add the winner, and then it turns around on me. Wind up making less after I've added. The best way is to treat it as if you weren't in it, if that makes sense. So if you weren't in it, where would you get long again, or where would you get short again? And if that sets up, rather than being emotional and chasing it down, wait for it to set up again. Wait for it to lower highs, break down, kind of like the basketball analogy that I gave, or ABCD starts to grind up. If you weren't in it, where would you buy? And that's going to be a good spot to add. And again, if you size in and it starts to either consolidate and grind the other way, you can always size down. And everybody's like, well, now I'm burning commissions. Well, okay. Well, if you don't burn commissions and then you go ahead and let it go against you and you lose $300 or $500, what's cheaper, the $5 commission or the $300? So never underestimate the power of just going ahead and scaling out and going back to your original size. Nate, you always nail dead top and dead bottom. How can we learn to do this too? It's over time. I'm not always going to be right 100%, and it's just more about going on the other side of the trade. There isn't an answer here. This is a subjective versus an objective type answer, so I can't give you an answer. But it's just something that you learn over time. And when you're in the trade, maybe you don't nail the top, but it's more importantly, it's what you do with the trade, and whether you know to add in, whether you know to scale out. But if you don't have the DVD, I would definitely suggest doing it, but I go over a lot of this stuff. What kind of cushion do you suggest before allowing your account to be labeled pattern day trader? I don't know what you mean here. Pattern day trader is just somebody who trades more than three round trips in a 5-day rolling period or something like that. So it's not really about what cushion or what size account to be labeled as a pattern day trader. If you make more than if you make 4 trades in a 5-day period, then you're going to be a pattern day trader. So let's see. When you use a specific price to get absorbed, but doesn't break down after you add it into the winner, anticipating the break out or break down, do you take off the ad immediately, or do you let it retest? I would look at the chat logs today, ISR. I didn't want to get into a situation where I was in too much and it started to rip back towards 280s. Adam Feurenstein had bashed it this morning, and I wasn't sure, if it held out of the gate, and if he attracted a bunch of shorts and then it ripped up. I didn't want to get into a situation where it was just kind of a squeeze from the morning. So I was scaling in and scaling out. I added in, I added again. I had a little bit of size, then I scaled back down just because it was starting to hold. So anytime that you add in, just like Loco or MVLY, I think yesterday, anytime that you are adding in and you're anticipating a wash, let's just say right here, actually it was MVLY yesterday. Yesterday's chat logs, if you go back through them, before I nailed it, there was a period of time where this 40 held right here, and you can see the base here. Same exact thing as Loco today, and I'll just show you real quick before I get to that. So Loco today, remember when we were talking about this right here? So I'll zoom in on it. See this action right here, 35 base, basketball analogy. Same thing yesterday. Go back yesterday, back, zoom in. Let's see, right here. Same exact thing that we were just talking about. Basketball, bounce, 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 dribble, dribble, dribble on the floor at 40. So as I had said, once that 40 snaps, it's going to wash out. And that, obviously that's where we made all the money yesterday. But did it snap the first time on 40? No. So I nailed the short here, and it ramped, and it washed out. I covered some, ripped up, came back. Well, now lower high, lower high, lower high. Near that 40, I added in, anticipating that 40 wash. Did it wash? No. Check the chat logs. I sized back down. Went back up. Great. Glad I covered. Boom, 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 boom. I added in. Crack. And I ended up making money, or making a lot of money. But point there, I think, really answers your question as far as, if you add into a winner, and keep in mind I was trading around a core, so I had a short, covered some here, got it again, covered some, and then I added for that wash. The wash did not happen. So I think this really answers this question the best. If you add in and it doesn't break right away, what's your thought process, what's going on, and how do you react? And that's a perfect example of scaling out, scaling and scaling out, anticipating something. If it doesn't happen, then there's no problem covering it. You can always get back into a trade. ECN direct access is, you always have to pay ECNs. Centerpoint, I always have to pay ECNs. So it's you can change the way in which you trade. If you trade a lot, you can get potentially rebates. But email me and we can check your commissions, make sure that you've got a good deal on them and whatnot. But depending on how you trade. I think he's asking how much he should have over 25 in case the account has some losses, restricted from trading. You never want to be floating around 25 grand because then you're going to be emotionally trading just as if you had $2,000 in your account. So, if you're at 25,500 or 26,000 or whatever, you're going to always be thinking about, oh my God, I can't lose $1,000. Oh my God, I can't lose $500. So rather than letting the trade pan out, you're worried about over and under the pattern day trade rule. So if you can't fund an account fully with 50 grand or something like that, 35 to 50 grand or whatever, then just trade at SureTrader. There's no reason to put that emotion on yourself, jumping around that 25K mark. Notice on your DVD you do not use moving averages or indicators on intraday charts. Is that just not part of your trading style? Same reason I gave in the DVD. Simpler is better. All those kind of things I feel like are after the fact, and you look at them after the fact and they look like, yeah, you could have predicted that move, but if you look at them intraday, they look nothing the same. Yeah, 100 trades a month, and yeah, I mean, depending on if you have to do ECNs or not. To be honest, E-Trade, you might have a flat fee of $5, but a lot of times I have to. Let's just say I have 50,000 shares of something in E-Trade on NASDAQ, and I hit the bid, and there's a 100,000 share bid or something. It will not hit the bid. You got to go in and you got to either do like random 7,000 or 13,000 or whatever orders and send down a bunch of them, and you'll flash fill. You'll fill immediately, but they will hold your order. So the difference between ECN fees and things like that is, you get that instant fill. You get that quick fill, and you don't get any bullshit type stuff that happens, and it happens all the time with me on E-Trade. So I rarely hold over. What is the criteria for you, or when you decide to hold overnight for gap play, and do you sell the first pop of the morning? Do you have an example to show? Not really. I mean, not recently. I haven't really been gapping. The market's been all over the place. Typically, I prefer like a more stable market, but a lot of times you get the nice gap up moves on the momentum type trades. But usually, if it's gapping up pre-market, then I will definitely lock some in right away. I always lock in, and then if it doesn't continue its trend out of the open right away, then take it off because you bought it for a gapper. And if it's not gapping, if it's not running, then it's not doing what you thought. So treat it like a regular trade. Any other questions, guys? That's it with all these, and we can go through scan for tomorrow and go from there. Before we start, I'm going to keep beating a dead horse on this, but on make sure that you sign up if you're thinking about coming. Don't wait. If you are planning to and you're going to wait a couple days or whatever it is, just email us and just let us know, just so we can kind of keep an accurate count and whatnot. We're not doing hundreds and hundreds of people. We're doing somewhere between 70 and 100 or so the first year. So there's a limited seats, and we're almost there. And then we're just going to end up having to close it because we're not getting a bigger room. So if you are interested, you don't have to be good at golf. Friggin' Modern Rock got the winning shot last year, and he'd never golfed in his life. So that should tell you something about the whole golf game and whatnot. But it's a fun time. It's a good chance to kind of meet people, not behind your monitors. And just kind of meet the people that you work with every single day and just have a digital relationship with. So you can read about how it all started and everything. The events page, you can click, and it's got everything that what we're doing, the events October 3rd, 4th, and 5th. This minimum is going to go up on August 15th if we haven't sold out by then. but it's going to go up to 750. And then if you want to golf, if you want to bring a spouse, there's a lot of spouses going already, which is good. I wasn't sure how it was if people were gonna bring them or whatnot, but I would say more than half the people that signed up are already bringing spouses. So that's pretty neat. It's not just Vegas shit show like you might imagine. I think it'll turn out to be a pretty good event, and for those of you guys that are trying to make trading a career, you can convince your wives or husbands or whatever that it might be look at all the people you're hanging out with, and it might be a good idea. But all donations are 100% tax deductible, and we have discounted pricing if you click this link, to go ahead and do that sooner than later. We reserved a block of rooms, and all you got to do is just reserve a spot. You go here, fill this stuff out, and you can either send a check or PayPal. When you click submit, we get this form, and then we'll probably email you if you're going to send a check. Just confirm, and then you can just go to PayPal. So I do hope to see a bunch of you guys there. A bunch of the moderators are going. A bunch of people that you see on Twitter are going. A bunch of the services, Hammerstone, Lucci, Haim Bodek, and Brett, Dr. Brett Steenbarger, and a lot of people. I first found out about him about 2 years ago, and he writes a lot of blogs and whatnot. But as soon as I mentioned it, people went nuts. They really they followed him quite a bit. Then a couple other investigator type people, John Welsh, Ethical Capital, and a bunch of others. So if you have any questions, like I said, use this email. Ask. Don't be afraid to email and ask about anything, whatever, and it's going to be a fun time. So that covers that. All right, I'm going to stop recording, and then we can just go ahead and talk about trades for tomorrow.